we are on quite a bit of a red streak with Tesla stock, so I had to bring in somebody who knows a little bit more about it than me to help talk me down from the ledge a little bit. Herbert from Brighter is with us. I'm Brian. Welcome to my Tesla weekend. Herbert, I know you just got back from vacation. I've got some very bad news for you, my friend. The stock has
Yeah,
been,
yeah.
sliding 1% a day for 3 weeks. Uh, what do you think? I've got some thoughts I will share, but what do you
hmm
think is going on?
I don't know, right? Obviously, I don't know who who knows what's going on. I just did an interview with Brian Feroldi, and he is amazing in terms of like just how to invest and how to evaluate companies. But just like him and many others, I'm a long-term investor. I don't know what's going on, and if anybody can tell you why the stock moves the way it does in the last day, week, or month, but I know that's an unsatisfying answer, right? So, why is the stock falling in the last 3 months? It's just weird to me because obviously I see the world differently than others do, right? I think that Tesla is absolutely undervalued, and then yet there's other people that are saying that it's already close to 800 million dollars market cap. It's overvalued compared to other competitors. But I thought it's very clear in the last 3 months specifically. It's very clear to the world now, and we're watching this, the CNBCs and the other mainstream media reporting now that the competition is not coming, that other car makers are struggling. So initially, it was always that thinking, right? That the you're a car manufacturer and you're overvalued. But I think it's not no longer, or at least the cracks are into that storyline is breaking up. In the meantime, we're hitting the milestones, right? I think maybe people are still waiting for Giga Mexico to be launched. They're waiting for the Cybertruck, but every bit of news that we're hearing is seeming like it's moving forward. So it just feels like it's kind of disconnected, right? As always, it has always been. I think the big one that I think everybody's saying is the margins. So at the beginning of this year, there was price cuts. And then there's belief that they might need to do more price cuts. Despite that the economy seems to have turned around and people are much more bullish about the second half of this year than not, there's still this concern that Tesla is going to keep the price cut, the prices low, to be able to continue to sell. And that is true, right? Interest rates are still very high, and this is a high value asset. People buying the cars need to borrow money from the banks and interest, and the interest rates have not budged yet. So when that changes, then people will realize that the more sales will happen. But right now, I think that that's still the storyline: is the margins and the price cuts is what's concerning people. I think that that's what would it be.
And I would agree with you. The fundamentals from a year ago have only improved. Production has improved. Cost to build has dropped significantly, though a lot of that isn't realized in the profit because the prices have also had to drop. The it's the company is firing on all electrons, I guess, since we're not saying cylinders anymore. We are waiting to see some big changes. To me, the answer of, well, why is it down? Because it just is. Because the market isn't always rational. Maybe people are waiting for a better time to buy. I don't know what it could possibly be, but over the long term, I'm not concerned. The the share price we're seeing today is still good. It's still strong. It's still more than a lot of other companies that some people have more faith in. Obviously, you and I have tremendous faith in Tesla and their ability to execute, and not just execute, but what it is on which they are executing. So, in your mind, is there a number at which it bottoms out? Where is the bottom?
You're gonna ask me that question at the year after 2022? It went down to
Yeah,
100.
yeah,
I don't play that game, right? I don't
right.
try to come up with numbers because I have no idea. It all can change very quickly in a week, in a month. I will tell you that just 3 months ago, 4 months ago, everybody was so negative because the Q1 earnings came out and everybody just said, "Oh my God, right? This margins is going to be it's going to be depressed forever." We thought that there was still going to be a massive recession and people were just panicking. And at that time, I said, "You know what? It can turn around as quickly as it kind of like, either sentiment can happen at any moment." And I was correct in this case. right? Things turned around very quickly, and people forgot already how what a dire straits that we were at just 3 months ago.
For
Um,
sure. For
I
sure.
think the question I want to ask you is like, it's Elon, right? I mean, the earnings calls that he is at, and the things he says, and the things that he's saying now, the fight with Zuckerberg and all these things, it doesn't help. And you just watch earnings call after earnings call of other companies, and you watch their CEOs of how they handle it. Elon does it very differently. I'm of the camp that Elon should be at these earnings call, and I'm of the camp that he should continue to do what he's doing. By the way, I'm not on the other part of it where some people are saying that he should not be in these calls or he should not be talking about the vision of the company. Absolutely wrong. I think that he should be talking about the vision of the company. He is the company, and the company is successful because of that. But it doesn't help the short-term investor in the stock price. The argument is that in these earnings calls, your audience is institutional analysts and the mainstream media, and they want to hear very precise guidance. They want to hear they don't want to hear about possibilities of what the company might do with these new products. They just want to hear very, very specific information. Like a CFO, boring CFO talking about facts. And that's not what Elon is. But I think that that's the way it needs to be, because I've noticed that in these earnings calls, Elon is changing the narrative. So now, in the first quarter, you're hearing, in the mainstream media talking about Tesla as a AI company, and Tesla as a bot company, and they're now an energy company. So these narratives are changing slowly, and so it's just a matter of time when the stock price will catch up. But it is frustrating, and I do have to say that maybe one of the reasons why the stock is lower than it is and could be is because, again, it's just the way that the earnings calls were handled. And I mean, he's still calling for a potential recession. He's still calling for, unknown what might happen. He was talking about margins and protecting yourself margins. So whenever you hear that when the executives of the company share any kind of negative kind of fear, it trickles down. But what's your thought on that?
Well, I would agree with all of that. I would say that some of his, he's a package deal. You have to take the good with the bad. But driving over to another executive's house to have a cage match in his backyard is not a good look to investors. Sure, it plays well on X where the where his fans all reside, but saying you're gonna teabag Mark Zuckerberg, I mean, who among us hasn't wanted to, for sure, but that's not the selling point with Wall Street. It's not helpful. Over the long term, none of that will matter. Only execution will matter on the 10-year, 20-year horizon. It doesn't matter how much somebody likes a company if it's not executing, or doesn't like a company when it is. I put out a video about the real problems Lucid is having based on the quarterly earnings and the quarterly call, and the Lucid faithful were just not interested in the facts. They're saying, well, you just like Tesla. Well, I do like Tesla, but that doesn't change Lucid's earnings. It doesn't change their outlook. Well, they're not just a car company. They're an energy storage company. No, they're not. That was actually they only took 4 investor questions on the call, and one of them was, no, we're not working on stationary storage. And they're like, no, but really he is. Oh my gosh, you guys. It doesn't matter how much you love the product or love the idea of it or love the stock. If the execution isn't there, and it isn't, it's not going to work and it's not going to matter. Now, I do have a gift for you, Herbert, a catalyst for 2024. Mm-hmm. Put this on your list. Interest rates going back down. Is that already on there?
Oh, absolutely. No, I did not put that in, but I should, because it's absolutely one of the biggest catalysts. I keep track of Tesla milestones, just to be clarified, not necessarily stock catalysts. Some of these milestones, Tesla milestones, are catalysts for the stock. But clearly, if I'm looking at it from a stock perspective, the interest rates are, the number one thing that affects it. You're right. But again, I'm just clarifying for folks. I'm the milestones person. I keep track of Tesla milestones. Now, this is an activity that I did last year, and I did a really long, deep dive on this, Brian. I took a look at all the milestones that Tesla's ever done, and I found this website that overlaid the stock price based on these events that occurred that Tesla did. Okay. And then I would watch to see whenever Elon does a stupid tweet, what would happen to the stock price the months, the weeks, the days, the weeks, and the months after that particular event happened. And for every event, I can see what happened. And I was trying to find patterns. And the patterns that I found was simply that, Elon's tweets don't actually move the stock price. Okay. So they might move it for a day, maybe a day or two, but it doesn't do any kind of long-term improvement. In fact, if you remember Elon saying that it's the opposite. If I say that the Tesla stock is too high, the stock just skyrockets. So you can't really do that. So I know that we're complaining about Tesla, Elon saying about teabagging, Mark Zuckerberg and going all that, but that doesn't really actually impact the stock price. Okay.
Right.
What does is quarterly earnings. Basically, that's the big thing. And if you look at after the earnings calls, you can see a sustained increase in the stock price, not only for that week, but months afterwards. And it's really just a simple thing where people are seeing that the production and deliveries are coming out, that they're no longer going to go bankrupt, that things are starting to sell. And it makes sense, right? Because earnings, it just, you can't stop a stock price from rising if you continue to report margins, sales, revenue, these things. And so, I think where we're at is that Q1 of 2023 was an anomaly with the price cuts because of the macro environment. And so people got, 2022 was already a terrible macro environment. Q1, Tesla had to cut prices to be able to continue to sell. And then Q2, I think that there's still this concern that we're not past it. We're starting to see signs that we're going to get past this, but there's still uncertainty of what will happen. And so when will we see the margins rise back up again? And, it doesn't help that the guidance from the company is very much that we don't know if we're going to keep cutting price. We might need to if the interest rates are increased. But like you said, if the interest rates are cut, and you said next year, there's actually now more and more people saying that the pivot will happen this year. It will happen this year, that they cannot pause for the next 6 months. They will actually have to pivot and actually cut interest rates now. If you see what's happening in China, it's deflationary there. And somebody made the comment that if you see deflation in China, you're going to see deflation in the world. This is just, that's what drives it all. And so they are massive deflation now, which is really, really bad news. And so Fed has no matter what they're going to say or want to do, they will have to cut interest rates. And when the interest rates are cut, then this is what happens with high value assets like cars will sell. And so anyways, my point is that last year was terrible. This first half of this year has been terrible for Tesla. But this is basically, I better not say it, it's like the worst conditions possible. And yet the company is continuing to hit milestone after milestones, gigafactories being built, volume production, new car segments, the Cybertruck, the Model 3 Highland is coming out. The Giga Mexico, when that comes out, they're going to see a new compact car. These are the things that moves the market, the company forward. And now we're seeing movement with the Tesla bot and FSD. So just pause and realize that 2022 and 2023 is the worst. It's knock on wood, right? But it's going to get better when the macro flips. And Tesla is an AI company, and this is all going to go, and it's just going to just skyrocket up. So we just have to kind of hang in there.
And AI is one thing, bots is another, driving is another, energy is another. There's a lot of good things on the horizon. And if you're looking for stock investment advice for the short term, may I suggest a magic 8-ball?
Exactly.
It's going to be about as good as the best Wall Street analysts.
Yeah.
And so, okay, well, Herbert, I thank you so much for giving me so much of your time. Folks, Brighter with Herbert. Oh, let me point the right direction there. He does great work. I'm even on his channel once a week, generally on Wednesdays. It's a lot of fun, and you can follow him on Twitter at Herbert Ong. So thank you again, Herbert, and I will talk to you soon. And for everyone else, what did we miss? What do we misunderstand? Leave it all in them comments below, and stay tuned and stay juicy. And I can't wait to hear from you, clever robots, on the next one.